How to write up ledger accounts. Lesson 1. Ledger format. The name at the top is either asset, liability, income, capital, expense. The date column records the year, month, and day of a transaction. The details column records information to complete the double entry. The folio column records the book of original entry for the transaction. GJ1 is General Journal page 1. CB1 is Cash Book page 1. SJ1 is Sales Journal page 1. PJ1 is Purchases Journal page 1. RIJ1 is Returns Inwards Journal page 1. ROJ1 is Returns Outwards Journal page 1. The dollar column records the value of the item. Lesson 2. Double Entry System. Every transaction has two entries, a debit and a credit. Assets increase on the debit side. Assets decrease on the credit side. January 1st, 2022, bought motor vehicle with cash for $50,000. Both motor vehicle and cash are assets in this transaction. In the general ledger, record the increase in motor vehicle. Add the year, month, and day in the date column. Insert the account that made this one increase in the details column. Add the book of original entry, Cash Book page 1 in folio column. Record the amount in the dollar column. In the cash book, record the decrease in cash. Add the year, month, and day in the date column. Insert the account that made this one decrease in the details column. Add the book of second entry, General Ledger, account 1 in the folio column. Record the amount in the dollar column. Expenses increase on the debit side. Expenses decrease on the credit side. However, an expense with a credit balance becomes an asset. January 5th, paid repairman with a check for $200 but overpaid by $50. Repairs done is expense, check is asset, and refund is asset. Check goes to the bank account in the cash book. In the general ledger, record the increase in repairs. In the cash book, record the decrease in the bank account. Deduct the overpayment of $50 by crediting the repairs account. Record the date of the entry to be reversed. Transfer the refund to the asset account, accounts receivable. Record the book of second entry, which is Sales Ledger account 1. Enter the refund amount in the dollar column. When the refund is received, record it on the debit side of the cash book. Liabilities increase on the credit side. Liabilities decrease on the debit side. January 2nd, borrowed $2,000 cash from bank. Cash increases on debit side and bank loan increases on credit side. In the cash book, record increase in cash with details bank loan. Record the increase in bank loan with details cash. January 31st, paid bank loan in full with a check. Bank loan decreases with a debit balance. Bank loan decreases with details bank. When both sides are equal, the bank loan is paid off. Bank account decreases with details bank loan. Income increases on the credit side. Income decreases on the debit side. January 15th sold goods for $800 to P-Mart on credit. All credit sales transactions are totaled in the sales journal. The total is brought forward in the general journal and includes P-Mart. The debit entry is recorded in the sales ledger accounts receivable P-Mart account. January 18th, P-Mart returned $200 in goods back to the business. The sales account is never debited to record returns. Instead, reverse the sales account with a returns inwards account. This also carries a total from the returns inwards journal. Capital increases on the credit side. Capital decreases on the debit side. January 1st, owner deposited $5,000 in bank. Bank increases on the debit side and capital increases on the credit side. January 27, owner withdraws $1,200 from bank for personal use. The capital account is never debited to record withdrawals. Instead, a drawings account records the deduction. Lesson 3, Types of Ledgers. General Ledger. All accounts except debtors and creditors go to the general ledger. Sales ledger. Debtors go to the sales ledger. In the sales ledger, record the information related to debtors. Insert the credit customer's name at the top. On the debit side, record date, sales, book of original entry and amount. On the credit side, record date, returns, book of original entry and amount. Record any payment that the customer made to the debt. Record any discounts allowed to the customer for paying off debt. Total the debit and credit sides. A balanced account means it is closed off. Purchases ledger. Creditors go to the purchases ledger. In the purchases ledger, record the information related to creditors. Insert the credit supplier's name at the top. On the credit side, record date, purchases, book of original entry and amount. On the debit side, record date, returns, book of original entry and amount. Record any payment made to the supplier. Total the debit and credit sides and bring down the larger figure. Carry the difference to the smaller side to balance both sides. An outstanding balance means the account is still open. Cash book. Cash and bank transactions go to the cash book. With a cash book, there is no need for a cash account and bank account in the general ledger. Cash book is both a journal and ledger. Test yourself. What are the 5 types of accounts? Asset, liability, income, capital, and expense. Fill in the missing columns. Date details folio dollar, date details folio dollar. What are the names of the left and right sides? Debit and credit. What does GJ1 means? General Journal, page 1. What does CB1 means? Cash book, page 1. What does SJ1 means? Sales journal, page 1. What does PJ1 means? Purchases journal, page 1. What does RIJ1 means? Returns inwards journal, page 1. What does ROJ1 means? Returns outwards journal, page 1. On which sides do assets increase and decrease? Assets increase on the debit side, assets decrease on the credit side. On which sides do liabilities increase and decrease? Liabilities increase on the credit side, liabilities decrease on the debit side. On which sides does income increase and decrease? Income increases on the credit side, income decreases on the debit side. On which sides does capital increase and decrease? Capital increases on the credit side, capital decreases on the debit side. On which sides do expenses increase and decrease? Expenses increase on the debit side, expenses decrease on the credit side. What account reduces capital? Drawings account. What two accounts reduce sales? Returns inwards and discount allowed accounts. What two accounts reduce purchases? Returns outwards and discount received accounts. What account credits an overpaid expense account? Accounts receivable account. Which ledger has accounts receivable account? Sales ledger. Which ledger is sales account found? General ledger. Which ledger is discount received account found? General ledger. Which ledger is accounts payable account found? Purchases ledger. Where are transactions using checks found? Cash book.